This is the Stock Trading Reality Podcast, Episode 2.
I ended up turning $5,000 or $10,000 into over $100,000, and then, of course, didn't hang on to it. I didn't take advantage of that and take any profit. I hung on to it too long and let it fall right back down again. And
this is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host, who quotes the movie Dumb and Dumber on a daily basis, Clay Trader.
Yes, you heard that right. If you've never seen Dumb and Dumber and you enjoy kind of bad comedy, definitely go and check that out. Truly one of my favorite movies, and one of my favorite games to play is, hey, what movie was that quote from? So if you ever meet me in the streets and I play that game with you, just say Dumb and Dumber, and 95% of the time, you're going to be right. Welcome to the show. It is Clay Trader, and I'm excited to be back for episode number 2. Episode number 1, I actually interviewed our co-host, who is hopefully here. Ches, are you here?
Dumb and Dumber. I mean,
correct.
Starting?
Correct.
Okay. All right.
Yeah.
I'm here.
Okay, correct. Either way, glad to have you here. And like I said, interviewed Ches in episode 1. So if you're interested in more of his background and kind of where he is on his current trading journey, then you can go and listen to that podcast. But for today, we are going to interview Dave Purnell. As I explained in the previous podcast, we go in the chat room by aliases, and he goes by Hooch. So I will be calling him Hooch from here on out. And I don't know about you, Ches, but I am very excited for this interview.
Yeah, it was an absolutely awesome interview. And, I think new traders, along with, more experienced traders, are really going to kind of benefit from it. You took the view of my viewpoint, being a trader for 1 year, and now we're going to somebody who's been, kind of active in the markets on and off for 15 years. So, it was absolutely awesome. And he dropped so much good information and kind of knowledge. I think the viewers are really going to enjoy it.
Yeah, it was one of those, things where in our show notes you can go and see the quotes, but he really did have so many nice little kind of sound bites where I'm going to jot some of those down on sticky notes, put them around the computer, because I like to get other perspectives. I like to get other viewpoints, and that was kind of one of the hidden agendas here of the podcast. And, he really does shed different angles on things. He looks at things differently, and the hurdles that he came across during his journey, it was very interesting to hear, how he overcame those and, worked around them and just, moved on from them and kind of put them in his rearview mirror and said, see you later. I'm going to keep on chugging forward. So it's really a good interview. And Ches, I'm excited for it. Are you?
Oh yeah, of course. And I think everybody's going to enjoy this one a lot.
And with that being said, let's get right to the interview. Well, hey, Hooch, first off, thank you so much for taking time out of your day. I know you are an active trader, so I appreciate you, pulling some time out to talk with us.
no problem. You'll probably save me from some losing trades being at like lunch hour slow time. So
yeah, it is kind of, as Ches would say, we're in the chop house hours right now. So hopefully your morning go all right?
I had my $96 loser, and then I had a 318 on Apple calls and 515 on Tesla calls.
Nice. For anybody that's listening that doesn't know what calls are, that's just that's options trading. So kind of an FYI there. Well, let's hop into the interview here and get this ball rolling. So where I want to just start off is not quite at the beginning, but where were you in life? What was going on when you first finally discovered, not necessarily the stock market, but just kind of the financial markets in general?
Well, I didn't show any interest at all in stock markets until I started working at a bank when I started my career after college back in 1996. And then I finally started trading in probably 97, about a year later, after I got to know a lot of the guys I worked with, and they all traded, and I assumed they knew what they were doing since they had all said they'd been doing it for 5 or 10 years or whatever. And basically started off at the beginning of the .com boom, and I had the whole false confidence thing going with you could buy any ticker with that even had a website, and you're like pretty much guaranteed a 200% gain or something like that. So started off well, but like I said, I had the false confidence going into it, and then of course the dot-com boom eventually collapsed, and then it was all downhill from there. But yeah, I first started in '97 and kind of just jumped in, no training at all. I just was puppet trading and throwing darts, so it was not a good start. Even though it worked out financially, it was good that way, but it wasn't good as far as learning, good habits and things like that.
Clay likes to call that fool's gold, and that's kind of the same situation.
Yeah,
I was in,
exactly. Yeah.
my Bitcoin boom was kind of the dot-com boom of kind of your time. So,
Right.
yeah, where we didn't get scathed too bad, but at the same time, we were just kind of more on the lucky side than anything.
Well,
Exactly.
at least you guys' fool's gold was like kind of cool. Mine was turning on Jim Cramer and just the very first sticker symbol he mentioned. Yeah, I'm gonna go with that one. I mean, at least you had kind of unique fool's gold. Mine was just, I mean, basically as lazy as it gets. But I mean, I guess it is what it is.
Right.
So I guess it's safe to say that I was going to ask you, what was the first trade that you kind of put on right when you started? I'm guessing that was something in the tech boom.
Okay, so my first trade was with iCoke coins. I can't remember the actual ticker name or any details like that, but it was basically the company that was working with Coke to track all of their iCoke points system, and they had created their fancy website, and things were going well, and it was during the dot-com boom, so of course anything with a website you're guaranteed to make money. So I ended up turning $5,000 or $10,000 into over $100,000, and then of course didn't hang on to it, and well, I mean, I didn't take advantage of that and take any profit. I hung on to it too long and let it fall right back down again, and I ended up getting out before I broke even, but I mean, I lost probably $70,000 or $80,000 on the trade, from the high. So
Was this all on that iCoke stock, or is this across your?
no, it was all on iCoke. It was
Wow. So you
yeah.
so you went all in, and then you just started slurping down that Kool-Aid, huh?
Yeah, exactly. Yeah, figuring, it's got to bounce here. Oh no, it didn't. Oh, it's got to bounce now. Oh no, it didn't. And there's a just never ending.
So how did you justify it in your mind? It was going up and up. What sort of, things were going on mentally for you where you justified, no, I'm up, 50,000. Hey, I'm up 60,000. I want to keep, what was going on? Why did you not take any profits off the table? Psychologically, tell us about that in terms of how you kind of, you clearly tricked yourself, but how did that all kind of, play out?
Well, to be fair, I was in Italy at the time when it peaked out at about 100,000 or so. I was watching it on one of my wife's cousins' computers, and I couldn't get onto my broker or anything, and so I was watching it there. But if I really wanted to, I could have called up my broker and sold my shares. So I mean, it's not really that great of an excuse, I guess. But I just thought, this is a great thing. It's they kept on pumping out news releases. They kept improving their website and saying how many more promotions they're coming out with, and it was just it seemed like, it's got to go up. It was just no technical analysis at all. At this point, it was purely riding the news and drinking the Kool-Aid.
So from a trading perspective, trading is probably not even the best word. You
No, I
probably
wasn't
considered yourself an investor at that point.
Exactly. Yeah.
Okay, so that's I think probably where you're. Correct me if I'm wrong, but that's where your kind of mental, the mind trick you played on yourself came from. You're just telling, hey, I'm an investor here. Everything's great. I know what I'm doing.
Yeah,
and you just left it at that.
Right. At that point in my life, I'd been working in my career for a year or two, and things were good, and I had more money that I knew what to do with, so I wasn't worried about selling this and having to pay bills or stuff like that. At this point, it was just like, I'll just let it ride and be a millionaire one day. And,
Well, you were kind of a millionaire if you count watching 100,000 go back down to break even. But
yeah.
So very interesting, and that was all back in '97.
Yeah, well, it might have been a couple of years after that, maybe '99 by the time I got to that point. But yeah, it was right around 99 or 2000 anyways.
Well, that's yeah, it's not an uncommon story to kind of hear. So I guess at what point did you kind of reach the level of, admitting to yourself that you didn't know what exactly you were doing? I guess what led you to kind of decide to go seek out, an alternative way to kind of trade, or go from an investor to a trader?
Well, after the .com bubble burst, since I wasn't into shorting or anything like that, I was, still trying to catch falling knives, and clearly it wasn't working out. And it took me until about 2004 to finally realize that I didn't know what I was doing. But at that point, fortunately I was still green, but decided just to step away and admit defeat, and didn't really have any plans on re-entering the market or getting any training or anything like that. I just kind of hung up my gloves, and that was it. That was around 2004 sometime, and I ended up taking a few years off and didn't even look at the market at all.
Okay,
at that time.
Yeah, I find this very fascinating because let's just go through the timeline. So from 97 to 2004, you were in the market, but eventually, inconsistent, is that a fair word to describe it?
Oh yeah, for sure. I was taking huge swings. Like I'd have a huge winner and then like a huge loser, and it was just a crazy roller coaster ride.
So 7 years of just pretty much inconsistency before you finally just said, you know what, I got to just get away from this for a while.
Right.
So
yeah.
Nowhere did I hear, that overnight this happened, and then overnight that happened, and then overnight now you're driving, a Lamborghini. 7
Right,
years,
yeah.
and it was pretty much, you were essentially right back where you started, but you did at least gain a valuable lesson that you didn't know what you're doing.
Right.
And your conclusion was at least better of, I'm going to walk away, especially if you're green. So, props to you there for doing that. But for the listeners out there, that's a crucial point. We're talking 7 years here where Hooch, and for those of you that are in the chat room, you now know where Hooch sits in terms of his trading now, but think about that, 7 years, going back and forth. And Ches, back in episode 1, he's been in the market for not even a year yet. So, it's one of those things where there is a journey here, and by no means is this some sort of overnight type, you don't figure out all your lessons overnight. You can be inconsistent for quite a while. So you bow out, you go and do whatever you Canadians do up north during that period. So so you went out on the dog sleds and took your bobsled around the neighborhood.
Yeah, exactly.
Yeah, and then you eventually came back. Since we got this timeline going, what kind of year was that approximately, and where did you kind of re-enter the market at?
It was probably about 2008 when I started getting an interest into trading again, and this time I'd actually met or got to know a guy at work pretty well that was into trading, and this time this guy was on the technical side of things. He was like reading charts, and then he still watched the news now and then, but more just for like the sake of a catalyst type of thing. But he was strictly charts and technical trading, and he tried to show me some stuff and told me, go read this website and go watch these videos and stuff like that. But so I kind of learned on my own a little bit and thought I knew what I was doing. And again, I had some lucky trades, but I still didn't have the consistency there. But at the time I was still working, so I wasn't really worried about it. I was, it was more like a hobby for me. I wasn't putting too much on the line where it was going to affect my retirement plans or anything like that. So that's when the technical part of my trading started to come together.
So is it safe to say that at that point, though, you were still kind of applying the technicals, but on a longer term scope, kind of more of a swing trading type deal?
Oh yeah, for sure. Since I did have a full-time job, I would still watch things during the day, but I wasn't actively trading them. I was looking mainly at daily charts and weekly charts even and stuff like that. So maybe the odd time I'd look at hourly charts if I was, sitting there at lunchtime or something like that. But yeah, it was definitely swing trades, and sometimes I would hold things for just months on end, just hoping that eventually it's going to bounce back again if I was in a losing trade. So
go ahead, Clay.
Yeah, out of just curiosity, for those that are listening, at claytrader.com, we're all technical traders, meaning we do use the chart. So you said you're looking at the technicals. Can you define looking at the technicals? What exactly? I mean, because no offense to you, but clearly you didn't quite still know what you were doing back then. But in your mind, you must have thought, hey, I know I'm using these charts, but using the charts, could you define that? Like, what exactly did you think you were doing, and why did you kind of trick yourself in it, or how did that really kind of lead you astray?
Yeah, well, I knew what I was looking at and what to look for, but I didn't know how to use them. So I would know that the larger moving averages would be important support and resistance points. I knew that if there was a common price that the price kept that the price per share kept hitting and bouncing off of, I knew that was a support or a resistance. But I just didn't have the discipline to actually trust the chart and do what I was supposed to do. I would say, okay, well, it fell through that support, I'll just wait for the next support and get a bounce there. Then it would hit that support and fall through, and I'd say, okay, well, I'll wait for the next support. So I knew why the chart was doing certain things, but I just wasn't listening to the chart and following it the way I should have been.
Yeah, that seems to be kind of especially in the beginning for any kind of technical traders, including myself, you just have trouble, you don't know why you should trust the chart. You haven't developed that relationship yet. But
yeah.
I guess the $1 million question I'm sure our listeners want to hear is, what drove you from swing trading while you were employed to kind of actively day trading? What kind of was happening in your life that kind of led you to take the more active approach?
Well, the main thing was losing my job in 2011. It was a huge surprise. I didn't get my 2 weeks notice or anything like that. I got a email one morning saying I had a meeting to meet with my my boss, my manager, and then his manager, which never happened. And came out of that meeting, and I was packing my desk, and I was gone for the day. And it was a huge shock, which I'm sure you guys can understand. And it was I thought I was going to be a lifer at the bank. It was good benefits, making record profits every quarter. I was getting awards and getting bonuses and raises every year and all that, and it was just such a huge shock. And everyone I worked with, they were all in shock as well, and some of them were even petitioning the manager saying they made a mistake and stuff like that. But then fortunately I got a severance package for about a year, so I had that buffer there. But during that year, while looking for a job, I quickly came to realize that there wasn't very many jobs in my field, and all the job opportunities that I was looking at, there was thousands of other people in the same shoes as me trying to compete for these jobs, and people that were 20 years younger than me that wouldn't expect the highest salary as what I would be expecting. So I came to realize that I'm going to have to find something else in case this doesn't work out. So I did start looking more into day trading and basically just taking the same bad habits and doing it on a lower time frame, day trading stocks instead of swing trading them, but still not honoring my supports and things like that as far as points to get out. And once my severance was up, I went on unemployment insurance, and then it started to really hit me that I gotta really figure this thing out, and if I'm going to be doing this for a living, I got to really start taking it seriously and get educated. And fortunately, around that time, I discovered Clay and the iHub message boards, and that was the only good thing for me that ever came out of iHub was finding Clay. And
well, there goes that endorsement from iHub. So
yeah.
Thanks a lot. Yeah,
iHub sucks except for claytrader.com forum. So there we go. So I got to know Clay and a few other guys that hung out in the Clay Trader message board there, and through watching Clay's videos, I actually developed some more faith in charts and actually believing what they were telling me, and started doing better. But I still was struggling. I was finding myself being in the green more often, but still taking huge swings, and I still didn't have the consistency. And then when Clay started the inner circle chat and and offering more courses. I was, eating up all these courses and going through them all as much as I could. And then when the university came out, I was all over that, of course. And what really changed it for me was, I think it was about September last year, September 2014, when I took the risk versus reward course that Clay offers. That really was sort of the missing link for me. Like pretty much everyone knows in the inner circle chat now, whenever anyone asks, what did it for you, I'm like, I'll blab on for half an hour telling them how great that course is and how important it is to your overall survival in the market. You really do need to have a plan, and that was the one thing that was missing. Was I just didn't have a plan. I would buy something and kind of worry about it later, and now it's the exact opposite. I won't buy anything unless I'm quite certain that I've got the odds in my favor going into a trade.
Yeah, I gotta step in because you just said something that I think everybody can relate to. I would buy something and worry about it later, and it being the plan. Is that what you meant by that?
Yeah, exactly.
Yeah. So I mean, think about that, and I know what you're thinking. If you've never traded a stock, you're probably thinking, well, that sounds extremely juvenile. But I tell you what, there are so many people, myself included, where I would buy and then say, I'll figure it out. I just want to get, I got to get my adrenaline fixed. So let's just hop in here. I can't make any money if money's sitting in my account. But so let me just get in and then I'm going to figure it out. I'm going to wing it. I'm going to improvise and everything will turn out okay. Did you struggle with that too, Ches?
Oh yeah, of course. I mean, I think that's going to be like a recurring theme you're going to find on even people we interview, that's just a part of the process. That it's going to those are problems you're going to experience as a new trader. But yeah, I completely agree. It was a problem for me too.
Now, Hooch, did you, when you were on iHub, was that because you were getting into penny stocks, or I mean, I guess what even brought you to iHub? Okay, you were into the penny stock stuff.
Yeah, that was actually a new thing for me because for the first up until I don't know 2010 maybe 2009 actually I was more into the $5 and above stocks, and I always thought penny stocks were too risky. And then I don't know, I can't remember what changed it. It was no one at work or anything like that suggested it to me. I was probably just searching around on the internet looking for something that I can do to make myself a better trader, and then discovered penny stocks and hey, you can make 1,000% in one day, and it's like, oh, that's for me. And then found iHub and all these other like Yahoo message boards and everything else, and people are like dishing out the Kool-Aid there like it's like an endless supply, and it's just, oh my god, this is great, this is exactly what I needed. And but I was doing well at first, but then of course I was just fool's gold, and I just happened to hit some things at the right time, and I was involved in some more pumps than I was dumps, and then eventually the dumps started biting me, and then back to the drawing board type of thing. So
did you sign up for any newsletters?
Oh yeah, I had probably a dozen different newsletters on the go, and I would look at the newsletters every morning, and if there was a ticker that was mentioned in more than one newsletter, I'd figure, oh, this must be a good one because it's mentioned in 3 or 4 newsletters, and not knowing that those 3 or 4 newsletters are coming from the same source, different emails, but it's the same guy sending them all out, right? So
now, you said good one. So did you know that, or did you think that it was a good company, or did you think it was a good trading opportunity? Because now, there's a big difference there in the world of penny stocks between a good company and a good trading opportunity. Or did you think, wow, 5 newsletters mentioned this must be a good company? Or is it just, hey, I think I can make some money trading it?
Yeah, it was sort of a mixture of the number of newsletters promoting it, and then also the news that was in the newsletters saying that whatever, they've had some huge breakthrough or whatever it is, or not noticing the keywords in there that's like these there's no guarantees or whatever, that all the like the maybes and the looking towards and things like that.
So what was your first penny stock? Your first 1,000 people looking to get.
And I want to know what they did, because mine was stainless steel muffler, so I'm pretty sure you can't get any worse than that.
So my first penny stock was BER. It was back in 2010. I'm actually looking at my spreadsheet here and cringing as I'm looking at it. But
The famous spreadsheet.
yeah, I bought 50,000 shares at 66 cents.
So you went in big.
Yeah.
50,000 shares at, so yeah,
that was 33,000.
Yeah, I was going to say, if my math's right, that's over $30,000.
And then about a week and a half later, apparently I saw another opportunity to get in at an even lower price. So I bought 50,000 shares at 49.5 cents.
You bumped it, man.
Yeah, I bumped it. That was 24,800, say. And then the following year, and that was in December. Then the following year, 2011, in April, I sold them all for 20 cents each.
No,
so,
I'm not. Yeah, could you? What was the loss on that then? I'm not.
So the loss.
Oh, I didn't mean to put you on the spot and make you do math right now, but I mean.
Yeah, the loss was $38,000.
$38,000 loss.
Yeah.
And that was because you were, I mean, first penny stock, and you drank the Kool-Aid. Is that a fair assessment?
Oh yeah, definitely.
Now, did this company have a product?
I have no idea. I can't remember. I think it was some kind of a resource company of some kind, but I really can't remember.
But $38,000. So
yeah.
I think that pretty much summarizes don't invest into penny stocks. Are you a believer in that concept, Hooch?
Oh yeah, definitely. I mean, I was doing well on back then. I was investing in Ivanhoe Mines, which is now Turquoise Hill. They've got that huge Mongolian copper mine, and that was my golden boy back then. And so I can see on my spreadsheet a few months before that BER trade, I had made about $40,000 on the IVN ticker. So at that point, I was feeling pretty invincible, and figured I'd throw some money in BER, my first penny stock, and expected to come out with $100,000 gain probably, but clearly not.
So when you said you were going through big swings, I mean, you were definitely weren't exaggerating. You're talking about a $40,000 winner, and then your next trade, $38,000 loser. Oh
yeah, exactly. Like I'm looking at these trades now, and I'm thinking, what was I doing? What was I thinking? I'm buying 3,000 shares of IVN when it was $12, and selling it at $13, and buying it when it was $15, and selling it when it was $9, and it's just huge, ridiculous swings up and down. Fortunately, it was averaging up, but it was still completely ridiculous, and no thought or plan put into it at all. Just throwing darts mainly.
So you are now at, just to kind of fast forward in the future, you found iHub, you found my board there, you joined the inner circle, you got into the chat room, and then you really started investing in your education, and then you got into RVR trading. And from that point, tell us about where you were at, because I know just from watching you through the the chat room, you weren't quite into options yet. So you get done with RVR trading, a light bulb has gone on, but you're not quite to options yet. So tell us about that period in your trading.
Yeah, I had tried to understand options previously. When I was still working at the bank, I had spoken to some fellow traders there, and they were trying to tell me about options, and they weren't really telling me the simple side of options. They were trying to get into all the fancy spreads and all the different complicated strategies and everything that are involved with options. So I basically just said, okay, well, I'm never going to be an options trader. And then, of course, Clay comes out with his options simplified course in December, and then I was all over that. Took the course, paper traded for, I think it was about 2 weeks, and by about the second last day of December, I'd made my first real options trade. I believe I had bought one or two Apple calls, and within a couple hours made like 30 or 40% on them. And then from there I've just gone options crazy.
Yeah, so that actually coincides with a question we had from one of our listeners. The question was, I saw Hooch turn one account from 1K to almost 4,000 and another account from 2,000 to almost 6,000. So what was the time periods on those two accounts particularly? What was the time frame?
Well, the first account was when I started trading options the end of December, like literally like the second last day of December, I think it was. And
I'm sorry, I got to cut you off there just because it's such a crucial point for anybody out there getting into trading. So you've been trading for at this point, what, like 12 years, something like that?
Yeah.
And
yeah.
then
15, 16 years actually.
For a long amount of time. That's a fair
yeah.
statement.
Yeah.
You learned something new. And then notice what he did. That first account was $1,000, right?
Yeah. $1,000. You know.
But let me ask you this, Hooch. Why did you start with $1,000? Yeah, I mean, you have access to a lot more money. Why not?
Right.
Why not go with a lot more? Share your thoughts here. This is a valuable learning point here.
Yeah. Well, this was something brand new to me. Something I thought that I would never in my life be trading. So I wanted to make sure that if I wasn't gonna figure it out, that I wasn't gonna lose any more than $1,000, and it would just be it wouldn't be a huge hit to me. It would just be, oh, well, I tried and it didn't work out. So, assuming that I would lose all my money, the worst I could do was lose $1,000.
So in other words, you practice perfect risk management simply by limiting how much money you're going to use.
Exactly. Yeah. And I kept all of my options trading to within that account. I didn't touch my larger accounts with options at all at that point.
And I hope people will learn from that. I mean, just if you're just, whether it's penny stocks, options, Forex, if you're just getting started, even if you've been trading for a long amount of time, Hooch, when things finally click, he gets it. He didn't go in with $20,000 and say, hey, let's go. He started with $1,000. So a very crucial point there. If you're just getting started, or even if you're not getting started, even if you've been trading for 15 years, when you're transitioning into a different area of the market, you have to start small. You have to manage risk. And a very simple way to manage risk is what Hooch did. You just start with a much smaller amount of money. So sorry to cut you off there and go on a tangent, but that's a huge learning point there, and something that I think a lot of people could learn from. So you took $1,000, and then what you turned that into what?
Over the course of about a month, I turned it into just shy of 4,000. I think it was $3,800 or $3,900. And that was doing, I was trading mainly Apple and I think SPY a little bit, and trading no more than 3 or maybe 5 contracts at a time.
Yeah, so that's obviously I'm real happy that Clay kind of jumped in there and brought up the point that you had already kind of it clicked for you. You'd found your strategy, and even applying it to kind of a new market, you had kind of started to go in small. So by no means can people expect to have the 400% gainer, but you manage your risk right off the bat, and that's extremely huge. Now while I think the whole purpose of Clay's options course was to completely destroy the Pennyland world and convert people into options traders, myself included. But yeah, I really just do think that, me personally, would you agree that, options, with being such a small outlay of capital, is such a, it's such a viable option to play these big board names with, you can play these contracts for, $50, $100, $150, versus buying, 150,000 shares of a stock that has no volume and you're never going to be able to get out. Would you agree with that?
Yeah, for sure. Like you say, with penny stock, you're getting into it because of the possible, huge gains, like 100%, 1,000% gains that everyone always talks about. But what they don't mention is the volume dying, and then getting stuck volume there to assuming you play it right to get out of the trade. These big board tickers, there's never a day where there's 10,000 shares of the ticker traded. It's always huge. There's always going to be a market there.
Yeah, with penny stocks, it's always one of those things. You can always buy a penny stock, but when it comes time to sell, well, you're going to find yourself in a whole different situation. But, just kind of full disclaimer here, what you said, Hooch, I mean, $1,000 account to, 4,000 and basically a month, you weren't just randomly out there buying options, right? I mean, tell us more. I mean, I know there's more to the story here, but, to the listeners, I don't want to make it sound like, oh, you just start trading options and, you can grow accounts. I mean, tell us, how did you actually do that? Because I know you weren't just randomly buying options.
Right. Well, I was still applying the same technical knowledge that I gained through robotic training or robotic trading and all the other courses you offer. There's still risk versus reward there. You still have to plan your entries, and as far as the charts and the actual execution goes, it's the exact same as trading in equity. It's just there's different parameters you have to look at when trading options, as far as all the Greeks and in the money, out the money, and all that kind of thing. But when it comes down to it, you're just trading the chart, just like anything else.
Right. So it's not like you were just throwing darts at a board and saying, hey, that option looks good, I'm going to buy that. It was you had a strategy, and your strategy revolved around technical analysis, just like everything else. All right. So for you listeners, nowhere on the show are we endorsing that options are just a get rich quick way. That's a mouthful. By just going out there, opening up an options account, you still have to have a logic. You still have to have a strategy to do things. Now, a big question here that may be the most important, just because it's probably the most important in the world of trading. But you started off by saying, you started this morning by taking a $95 loss. And for you, that's just, I mean, that's peanuts. That's nothing. So my question, I know a lot of people are wondering, is, how does a loss work in your mind? In other words, how do you mentally accept the loser, and then how do you just move on from it?
It is the most difficult thing about trading, is accepting that you're wrong and taking those losers. But it's also the most important thing, because the deeper you dig yourself into a hole, the harder it is to dig yourself back out of it again. You really have to treat it as a business, whether you're doing it for a hobby or it's your way of paying the bills, which in my case it is how I pay my bills. This is what I do for a living now. You really have to take it seriously and not take anything personally. Everyone that trades in the market is wrong. You just have to roll with it and like I say, don't take it personally. Just move on to the next trade. There's always going to be another opportunity.
So we get a lot of questions here on Twitter as well, asking, what time frame do you primarily trade now? How long are you generally looking to hold, and what indicators do you primarily use in your trading?
As far as chart time frames, I guess my main chart that I watch is the 1 minute chart, but I do use multiple higher time frames as far as entry and exit points and scaling out points. I look at the 8 MA, 20, 50, and 200 MAs for support and resistance points, and I also watch the MACD and the RSI, though I find myself using the RSI less and less lately. It's something that we've been talking about in the inner circle, is started with DS as far as the MACDs. That's something that I've always kind of done, but not really realized it, I guess, until people started talking about it in the inner circle, is looking at multiple time frames and looking at the MACD and how it's acting and how it's acting with the overall trend of the chart. To give yourself one more thing going in your favor going into a trade.
Yeah, and I think a big breakthrough for me, and everybody in the chat would also agree with it, is when I came to the conclusion that multi-time frame alignment was something I was really missing. Obviously, you want to build a case for and have as much things in your favor as you can. So that was something I was definitely missing. But I guess my funny question here is, why don't you just trade a tick chart? Your primary chart is the 1 minute.
Yeah, I think I would probably go insane if I did that.
You might get.
I'm crazy enough trading the 1 minute chart. I can't imagine the tick chart.
Yeah, you might blow a few circuits trading that 1 minute chart. But we got another question here from an Inner Circle member. He was asking, in terms of a nominal value, based on kind of your trading accounts now, what's a normal risk tolerance for you at this point? And I want to stress this, just like Clay did before. Remember that Hooch has been trading for, almost 15 years now and has a large, he's got a decent sized account and this is his business. So his figures, are drastically going to be different than somebody who's a newer trader with a smaller account. So by no means go and take on, a ton of risk or something like that. Just remember that, guys.
Yeah. Today in my what we'll call the big account, my retirement account, I was still keeping it relatively small. So far, I've traded a total of 24 Apple calls and puts and 9 Tesla calls. So, I mean, Tesla calls are about $5.50 right now, and the Apple calls and puts, there was an average price of about $1. So I was only going in at most a few $1,000s, like $3,000 or $4,000 max, in the initial trade. The initial buy.
Then obviously, your upside is so much, larger than kind of the downside that you're preparing for. So obviously, those gains are fantastic, but, I know you are trading in your retirement account and, I know you have a few accounts spaced out. So, but yeah, obviously, I'd agree with you that RVR course really kind of sheds a light on, how to approach your risk.
Right. And something else I've also sort of learned since the RVR course is that if you've kind of picked a certain risk tolerance you can't really change that too much, because if you go in with a higher risk tolerance than normal and you make a bunch of losing trades, you're going to be way in the red. And then if you sort of chicken out and say, oh, I'm going to lower my risk tolerance, then that's maybe something you should do because you're taking too much risk in the first place. But I found that I was like losing faith in the charts and lowering my risk tolerance. I make some winning trades, but those winning trades wouldn't be enough to make up for my big losers that I accumulated with my larger risk tolerance. So you really have to kind of find what suits you and what you're comfortable with and really stick with it. Don't get overconfident and raise your risk, because when you do that and you have a losing trade, then you're going to have to go back to your lower risk tolerance and make a whole bunch more winning trades just to make up for that.
Right, and an important point here is raise your risk. Well, how do you raise your risk? Does that mean you're going for bigger wins? No, absolutely not. A very quick, a very simple way to raise your risk without even knowing you're really raising your risk is by increasing your position size. So normally maybe you play with 100 shares. You go on a little streak. You know what? I'm going to go with 500 shares. Automatically your risk has increased dramatically, and all you did was change the amount of shares you want to play with. So what Hooch is getting at, and please correct me if I'm wrong, is you need to find position size that you feel comfortable with. If you're hopping into a trade and immediately right when you get in, regardless of if you're green or red, but as soon as you get in, if beads of sweat start pouring down your face, my guess is you have too much size. You are risking too much money right from the get-go. Would you agree with that, Hooch?
Exactly. Yeah.
Yeah. So, keep that in mind that, a very hidden way, kind of a ninja way of the way risk can creep up on you is just all of a sudden, I'm going to go with a little bit more. And Ches, not to call you out, but you have some pretty good experience with this in terms of your contract size. In just a few sentences, sum that up for the listeners.
So I started relatively small just to get my feet wet with about 3 contracts. I got confident, I just like Hooch kind of said, I went on a streak and I immediately doubled my size and I went to 6. And I knew right from the get-go, playing 6 contracts on something with, a 30-cent spread, putting myself in the hole, $250 right away because I'm not, entering correctly. I knew right then that was just too much risk, and I sized right back down to 3. And that's going to be a personal comfort level for sure. But yeah, that's you got to kind of scale into that. It's not just something you just go in full blast. Like you said, 100 shares to 500 shares. You've just increased your risk by 5 times. And but yeah, Hooch, if one last question here, I think this is a big one that a lot of people enjoy is If you could go back and give yourself one piece of advice, what would that be?
To educate myself first and practice with paper trading. Because like I say, back when I did start, I wasn't doing this because I needed to make money. I was doing it because it was, something that I was doing as a hobby more than anything. And, I was losing money where I didn't need to be. So, I mean, whether you're getting into it because of desperation that you need to make money, like I did recently because I lost my job, or whether you're just starting off as a hobby, it's better to start all your good habits up front, because it's a lot easier to learn something correctly right off the bat than to unlearn bad habits. So for sure, getting educated in paper trading for like a year or two if you need to is like the way to go.
So you would agree that paper trading, for having a 48-hour stretch of successful paper trading probably isn't an accurate amount of time to gauge how well things are going to go?
Yeah, exactly.
I would go with 4 hours of paper trading. But okay, I guess 40.
Yeah, Ches goes with 4 hours of paper trading and then increases contract size by quadruple. So,
Yep.
Yeah.
All right. It is that time of the show, Hooch, where we're just going to throw some random questions out at you.
All right.
And you just give us an honest answer. We already know that you like Miley Cyrus, so you don't have to hide that from anybody, okay? So,
All right.
What is your favorite movie?
Favorite movie, I'd have to say Star Wars Empire Strikes Back.
That's a good movie. That's hard to
Yeah.
argue with. That's an American classic. What is
Yeah.
your favorite band and or song?
Led Zeppelin.
Led Zeppelin.
Yeah.
What is your favorite food?
Favorite food, I'd have to say pizza.
Now, is there any toppings on this pizza? Or I mean, we need a little bit more details.
Bacon, cheese, mushrooms, bacon, cheese, bacon.
That's
So you don't
that's a
like
good
cheese
combo.
very much then, huh? Cheese and bacon, not a fan of.
Yeah.
Are there any particular rituals you do in the morning before you start your trading day?
I'll play with my son and have a coffee and maybe have a shower.
I thought you were gonna say take a
Usual.
take a shot, and I'm like, wow, that's
Go down to
that's-
the bar, take a
Yeah.
shot, and then the sun comes up.
I was like,
Yeah, I'm not
wow.
really much of a morning person, so it's often sort of falling out of bed and stumbling downstairs, trying not to spill my coffee and scrambling to turn my computer on a few minutes before the market opens. But yeah.
Well, I think that's going to wrap things up, but I want to publicly just thank you for something. I've always appreciated it, but way back when Hooch, came across iHub, I've been around in terms of, that atmosphere for a while. So I've always had people, taking cheap shots at me, accusing me of things, of, whatever, what have you. Just, trolls are going to troll, and I've been trolled quite a bit. And Hooch doesn't do this anymore, which kind of disappoints me, but I understand he's actually busy trading and making money. But he is one sly dog in terms of having a quick wit, and he always had my back. When people came to troll, he would put them in their place so fast, it would just amaze me. I mean, it's a gift. Some people aren't able to, interact with trolls, but Hooch, that's one of your gifts. So publicly, thank you. It was always good for a laugh, and it was something where I've always remembered that about you is, man, I would never want to troll Hooch because he will turn things around on me so fast it wouldn't even be funny. So thank you very much, sir.
Oh, anytime. I enjoyed that, and I actually kind of forgot about that. I might have to go back to iHub and see if my account is still there and see how things are going back there.
I'll tell you what, a little hidden secret. Whenever I'm doing well or even doing bad, and I need to keep myself away from the trades because I need to chill out, going to iHub and interacting with the trolls, it can be a great way to distract yourself. Even Twitter or anything like that, it's one in the little hidden thing. So I would highly encourage you to do that, Hooch, because it's very entertaining to watch.
Definitely. Maybe
Chaz,
over lunchtime.
Yeah, Jez, you got any final words for our friend here?
Let people know where they can reach you. If you got a Twitter or a Facebook, or where you hang out primarily.
Yeah, probably Twitter is the best place to reach me, and my Twitter name there is @Hooch71, and that's H00CH71. And yeah, I'm not really that active on Twitter, but if someone tweets me, then I'm usually pretty quick to respond.
And also that will be linked in the show notes. So if you didn't quite get it to write it down, or if you're driving or something like that, you can just go to the show notes and see that. Well, again, thank you very much for taking time out of your day, Hooch. Like I said, you are a very active trader, and I appreciate it. And hopefully we'll be having you on again sometime down the road. And we'll cross that bridge when we get there. But I'm already thinking about future interview questions for you. So thank you very much, and it was great talking with you.
My pleasure.
That again was Hooch, and you can find all his contact information in the show notes. Ches, pretty good stuff, huh?
Yeah, like I said earlier, it's just an absolutely awesome interview from him.
And I hope that people really can get inspired and just understand that, 15 years he was at it before, the pieces really finally started to come together. And, he decided, you know what, I need to invest in my education. I need to figure out what I'm doing, and not a sales pitch for my stuff. If you don't want to take any of my training courses, that's fine by me, but that does not change the fact at all that you really need to get out there and go get education. So you can sit here and say, Clay, I'm not taking your stuff. That's fine. That doesn't change my opinion on anything. Go get educated, and possibly, hopefully, you won't have to go through a 15-year process like Hooch did. But I think with education and getting some training, you can really cut down on the time. With that being said, I want to just make a couple quick little request of you. If you enjoyed this, then by all means, please, if you're watching this on claytrader.com, click one of those share buttons, leave a comment below. Ches and I truly do like to hear from you. We will interact with you and, answer questions as they come, or just, respond and have normal discussions. If you're watching this on iTunes, please leave a rating and some comments. We want to get your feedback. We want to make these as, beneficial as possible. And it's one of those things where, it's a quick way for you to interact with us and for us to, build a better and better podcast program here. So thank you again for listening. Ches, any final words of wisdom?
Nope, not too much. Can't wait to see you guys next week with another awesome guest.
That is right. So we will see you back for episode 3.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.